Hello everyone and welcome back to today's morning report. Chart appraisals on Thursday the 2nd of April with me, Rich Pro, market analyst at Handtech Markets. Let's have a look at Euro Dollar now, and the Euro Dollar chart continues to sort of chop around really in this sort of slightly slow-ish, I suppose, consolidation that's just drifting lower. The momentum indicators on the daily chart are still not really in any sort of real positive net configuration. You'd still be saying that any sort of rally is a chance to sell. Looking at the setup on these momentum indicators, that's not really changing. Although we have had this slight rebound in the euro today, and my feeling is that I'm still selling into strength really, that has slightly now dragged the euro. The rebound that we've seen in the euro today against the dollar has slightly now dragged the euro back above this resistance. We saw, I talked about 108 figure being a key pivot level, and that had been the case yesterday. Tested twice, three times tested yesterday. Twice on the data points of the ADP number at 1:15, and then subsequently at 3 o'clock with the ISM data. And we've now actually seen the euro just in the last few hours start to push higher. So it's broken above that 108 figure level. And now, as I said, on dollar index, that is a key level near term. However, I'm still of the opinion that anything underneath this 109 pivot level, which had been a basis of support and now resistance, I think anything underneath that, I'm still of the opinion that this is a corrective chart. I still think that the momentum indicators, I mean, you've had this move today. Yes, it's still positive, and you're actually still you're 60, 70 points up, pips up on the day. So it is looking actually fairly positive move. However, we'll see how the euro develops, because obviously we've got non-farm payrolls tomorrow. The European session, the European markets are closed tomorrow, so you may well find that the euro dollar starts to settle down a bit and starts to consolidate in front of that payrolls data. So I'm looking at initially the 108 figure level as acting now, having been broken to the upside, it now becomes supportive. And then subsequently, obviously, the 107.12 mark, which is that key low that we saw on the 31st. However, as I said, I'm still of the opinion that this is just a minor rally within the bear phase. This is not really changing anything really. In fact, it probably gives you a better entry level. I'd be looking out for probably some resistance that starts to form. I would be still looking on this rally as a chance to sell. At the moment, obviously, we're just on a very near-term basis. It's looking fairly decent, fairly reasonable in terms of a rally. You've got a series of green candles, but if you start to get a sort of maybe a red candle coming through, then maybe that would start to suggest that we're seeing a bit of a consolidation more coming through. Very, very near-term resistance there at just around 108.40. If I can get 108.45 actually was the high on the 31st of March, and we're just underneath that now. We just sort of turned back from that point, so maybe even now we're starting to see it come through in terms of the consolidation. But it'll be interesting to see the euro, what it does in front of this payrolls data, because I still think that it's going to be a dollar. I still think we're going to see a euro falling in the due course anyway. So I wish you good luck in your trading on euro today, and I will speak to you later. Thank you.